Don't you just love headline-driven markets? I'll tell you, it gets dangerous and it gets, it's hard to deal with. Whenever you're on day 4 of a move to the downside, when things are technically breaking, it's always hard to at least be like very heavily weighted short, but it's okay if you were stopped out of some of your positions because of different commitment levels that you do have. I know over the course of the past 2 days, I've tried to stay with the portfolio approach, stay with some trailers that acted well. And then within the last 2 days, I was probably down to 2 longs and 1 short after having 8 longs and a hedge during the directional move. So what happened, it was, I guess, today we broke through the 50-day. Reed this morning said deal was nowhere in sight. Then all of a sudden, around whatever time it was, around 3:30, news that they're going to have an emergency or just a session Sunday night at 6:30, which will be great. Everyone's going to be tweeting all Sunday night, debating on whether or not it was good or bad. But anyway, they're going to try and get something done potentially for Monday. We'll see. All in all, it makes it for a very erratic trading environment. Erotic, whatever that word is. Anyway, and a little bit difficult. But it just goes to show you how the extreme ends of the move, you can't be pressing. And when you saw that igniting bar, just so you know, if you weren't long, it's fine. It was hard to be long. Okay, and if you were short, you probably were staying a little too long after the 4th down day. But anyway, on an intraday basis, I tried to show 2 different charts of how you could have switched some gears based on that news and how you could have measured whether or not there was just a trade in there for cash flow. Whether or not you took it overnight, it's another story, or whether you think it's a swing position that this morning or today's low is the low. We don't know. All we know is that there was some action and it was pretty tradable. So you go to the chart of the SPX here, and you'll see that here was that day from remember that Friday when Plan B was taken off the table. We were almost a few days before that. We were as high as 1448. And then on that day we were at 1443, and then today we hit a low of 1401. So within 5 sessions or so, almost 50 handles. So anytime you're 50 handles off a high, you have to be a little bit cautious. So with that said, we had this accelerated uptrend that we broke below. You had the 50-day moving average, which was right around here, that we broke below and came back above. So at this point, what do we have? We have a new point of reference. That's all you could say. And I think that we came in today with the rally under pressure according to the big picture with IBD. If we would have closed down there, it would have said market correction. Instead, we're still under pressure, which shows you still have to be very cautious. It doesn't mean game over. But a big distribution day over the next few sessions, if we don't get that deal, so to speak, we could see some lower prices. And if you look here, as far as just the macro fib, I tried to send out this chart earlier today showing you that here you go, from the low of November 16th to the high area. We busted through the 0.382% retracement. The 25 was right around this, this ascending channel trend. And then we held above the 50, above the 200, and above the 0.68. Now, just so you guys know, you talk about macro. Here was that last trend that we had from the June 4th low. So from the June 4th low all the way to the top, you never have to really sell the top. A lot of people, we were overbought at this point at 1474, and then it became pretty, sloppy, loose, erratic trade, the same thing, and then you could have sold this 1440 here, and then from there, that's when you had this move all the way down to the low of 1343. So if you look at the Fibonacci retracements here, from this low to high on the macro sense, so you can see how you can get out of the way and how things could continue, here you go. From that low to this high, we basically reversed right around the 0.618 percentage. Okay, we didn't hold the 25. We tried here. That's where the trend broke. Bounced off the 0.38, came to the 50, broke that, and then finally held here. So the reason I'm showing you that is that's why people are being cautious, because you don't know what level is going to hold. And right now, we broke the 25. We could hold around here, but if you start too early thinking that you want to catch the first quarter move, it might start from here. Or if they do come up with some kind of deal Sunday night and tomorrow we're up a little bit and we gap up, I guess Monday or into the after the new year, then that could have been it. So at this point, it pays to be light. And if you don't want to take a risk, you don't have to. You go to your 5-minute chart, let's just see how this worked out here. Okay, this was your first move, and then here was the morning downtrend. Okay, this was from just say 10 o'clock as it trended lower this entire time. All right, it's very, very hard to catch this first move because it comes out of nowhere, it squeezes the shorts and wakes up the market. That's why they call it an igniting move. It typically ignites another move. So right around here though is when it paused. Right around here is when I think I tweeted saying now we have to hold on the spiders. It was like 140, 160 in order to see if you get another move. So you might have missed 1405 to about 1412, but then if you got involved here for a trade, seeing it consolidate and put a bull flag in around 1410, 1411, you then had another 8 to 9 handle move all the way to where it peaked at 1420 and then closed right around 1418. So this first move is always difficult. But what'd you do here? You broke the intraday downtrend. You had igniting. It held higher, held the top 25%, and then continued. This is the trade you want to catch. You go to the spiders, and so you could see it price-wise. Very similar thing here. Okay, here was the downtrend in the spiders. Okay, this is when it ignited. Okay, and again, all this did is squeeze the shorts, say, oh my goodness, the market might continue, and then same way here is it came into some resistance. Here is where I think this is when we talked about it had a hold 140.60, which I thought about right there, held in there. Okay, this is when I actually took my hedge off because I'm like, you know what, I'm not really that long. Why do I have a hedge on? I don't want to be net short into this, so I covered right around this so people on the VTF saw it leave. And you could have really bought 140.90s, 141 for an 80-cent move into resistance or even a 70-cent move. So there still was a trade here without catching the first part. So you didn't have to catch a falling knife, so to speak. You waited till the igniting bar, breaking of the downtrend, and then this is where you could have got involved for what was a secondary move that made some sense. And now on the daily, I'm not exactly sure what it's going to be or how this is going to pan out, but it's like now a green bar considering where it closed, right back at the trend line. So now we'll see what happens. We'll see if this becomes a new point of reference. Maybe some guys are already saying you have a small head and shoulders pattern being built here. Here's the left shoulder, here's your head. This could be the neckline now, so maybe it does bounce up into the new part of the year, so to speak, with new flows or whatnot. So we'll see. As of right now, we didn't break. We're still somewhat bent. We reclaimed the 50-day, and now we'll see what happens there. As far as Apple's concerned, guys are asking me, I don't know at this point. You have so many different cross currents here with the stock. First things first on the micro portion of it. So you want to talk micro, here we go. This is when you had the 21-day break right here. This is when the trade changed for me, became a trade versus a hold, which was a pretty nice hold since 2 quarters ago or so. Here's when it didn't hold this moving average, here, this one, and blah, blah, blah. PS, this is where we're at. This was that November 16th reversal, pretty strong. This one had heavy volume. You had a nice gap, commitment, wound up coming into the moving average into resistance and failed real quick. Since then, it's been very, very weak. You had a small reversal, about a week or so ago when it went through 505.58. On this day, went to 501.23 and came back up. Okay, and that gave you a day and a half trade. And now here you are. Today, I was trying to actually short this, and it felt like there was some underlying bids, whatever. So anyway, what did it do? It traded below 510.24 or whatever this was, 511.12, went, tested this 505 area, breached it for a second to 504.66, and then closed pretty strong. So if you wanted to be long a little bit overnight, which I am, there's a little bit of a play there, or a tactic to do so. Good book says potentially try it here. Here's your floor. You have a downtrend here. In order for this to get a little bit looser, so to speak, it has to reclaim this 8-day moving average, which is like 521. If you want to potentially do an active trade for it to to squeeze a little bit into the new year. You do have the major downtrend that comes in around 540. So this is not a lot, guys. I know it. It's not a lot. Cash flow wise, could be a lot of money for a trader. For a macro investment move, not a lot of money. Okay, and what you're risking is, all of a sudden we open down tomorrow and then it breaks this area, and then, and then you have a whole nother, ball of wax to deal with. which, which is this big macro pattern, or the elephant, which I talk about in the room, which is the left shoulder, the head, the right shoulder. It's hovering on this neck, on this, support. Breaks this, you have 486 and then 440. And if this does wind up breaking and closing below, the conversation is being talked about, from the measured move from 700 to 500, that takes you down to 300, and that would be really bad for next year's action. So I don't think that happens, but we don't have to know that yet. As of right now, on a micro basis, here is step one. We've had step one a few times, and step two would be clearing this and closing above it with some force. And that would be a nice little trade going into the year end or the first day or so. To show you how you could have panned out on the 5-minute chart here, okay, you'll see that this was the opening move, okay, when it broke this 513. I know I was trying to short a little bit right around here. Wasn't the easiest thing to do, around 510, and finally it gave way. You talk about a downtrend, so to speak. Here is your downtrend in Apple, or descending channel, throughout the course of the day, from the open all the way to the close. And then this was like the first thing to go. Boom, those futures went, this went from 505 to 510 and paused right there and stopped for, a few minutes. And I think at that point I tweeted, I'm like, we got to hold above 508 to show some commitment. I wasn't in Apple, I wasn't short Apple, I had it out of the way, and I said, you know what? For some reason I feel like they got a lot of people out of the stock and short below 510 into 505. It's the end of the year, last day I think of tax loss selling for T+3 PS. Got involved a little bit here, added on this 510, sold some, kept some, and it closed pretty well. So as far as an active trade, if you're an active trader, yes, it's really hard to catch that move. There was no reason to, because the wrong thing was buying into that support. Because if it broke that support and we fell apart, you were catching a falling knife. Instead of catching a falling knife, here's your igniting bar, and then this was your, get involved as it held higher, because at least your risk was 508 this time, and then it wound up being a nice trade from 510 to as high as almost 516, $5-6. And you could have traded around it a few different times, as it went positive. So now the question is, what does it lead to? We shall see. You got a lot going on here, okay? For right now, I'm trying to approach this market very short-term incrementally. You have a bit of a reversal. Let's take a look at the volume. I don't think there was that much volume. It's, it's the end of the year. It's not like this reversal. This reversal, you had huge climatic volume, and that's why you had to move from 505 almost 80 points. Okay, here, a bit more volume than the past 2 days, and there's less people probably at work, so maybe that's an incremental positive. So this is your next step, and we shall see what happens. It might be Friday, it might be Monday, it might be Wednesday. I'm long it. I probably won't give it to the low of 504. I would say, for it to, keep me interested, keep some short-term momentum in there, let it hold above 510, and maybe do an inside day to absorb this and then go. But we shall see. As far as the financials, you take a look here. Let's remove some of the volume so we can see it a little bit cleaner. I don't like when you have like a breakout above a momentum level and then it comes back. It tried to go below it, but it closed okay. I got stopped out of my Wells Fargo just because I wasn't really that committed to that stock anyway. It was more of a laggard catch-up play. I was hoping that as long as it maybe showed commitment to this area and flagged, it would continue. Got me out of it, which I'm fine with. I'm still in my Bank of America because that's been my core bank trade that I've been talking about. Here was your long above 995, nice bull flag, nice add, another flag. Held above it. It was only down like 10, 15 cents, so I'm staying with this one. This one is like a macro hold and something I'm talking about for 2013. According to the weekly chart, I still think, I could see 1450, so I'm going to try and stay in this one, until I see that area. Amazon guys were really upset. They got stopped out at 255, but I'll tell you, much better than, getting stopped out today, in the second move through this support. This was your high level stop at 255 or your short opportunity, big move lower. Then there was another shorting opportunity through this support, and then it held the moving averages. I drew this line this morning, and it closed okay. So at this point, I think it's just a choppy two-way trade. It needs to show you some commitment. It's probably going to be choppy until we have earnings in January. So here is your descending channel break to the upside, consolidation tried to go, and then momentum left right here. You had some nice downside follow through, and now I just think it's going to be noisy. As far as retail, we talked about it today in the morning call, and it broke this this just say uptrend, so to speak, or this minor ascending little channel, whatever you want to call this, and broke below it. And today it reversed. It reversed at the 200-day. So first time you touch the 200-day from a big travel range, typically you hold it. Now we'll see what happens here. See what kind of bounce it can get. See if it bounces and gets rejected by 44 or so. The ags, sloppy. This was that downtrend that broke, came back, retested, coming off of it. Looks okay. XLI. This too, very, broke above this downtrend, couldn't hold higher, gapped down with the market on that Friday, came off the lows, pierced through this area, but they couldn't close it below. So we'll see if that's showing you that they stopped some people out and now do some more work above this 750-ish area, and perhaps it tries to fill this gap in the new year. So at least, it didn't close below it. Some buyers came back and showed some support there, so the industrial still kind of hung around. Yahoo, I'm still sitting in. That also is, more of a macro play for me. I don't have much size there, but I want to stay with it. For 2013, this was the level I talked about, the 1660 level. It's acted very well since. It's still holding the 8-day. The only way I get out of this thing is if it breaks the 21-day, which it hasn't done during this entire run. So at this point, I think Yahoo still looks fine for swing traders involved in there. And then, I'll be honest, there are a lot of macro swing trades that are still fine. For guys that don't trade actively, don't trade professionally, that are holding things that they love, but they're tier ones only. Until the market conditions start showing its face that it's a little bit better, then you can get into bigger size. For me, I'm more of an active swing trader where I'm in front of my computer. I could always try and get better prices. I got stopped out of things. And you look at Facebook, for instance, I got stopped out of it, and it wound up coming back above this level, and I didn't get back in it because, I'm just going to stay away, and if it finally starts breaking above this area, maybe I'll get interested. But for right now, there's no reason for me to be there. I loved it when you had this pent-up momentum right around 23.75, 24, gave you your in-motion move until you had this bit of a reversal outside day, and since then it's been a choppy mess. I personally don't need to be in choppy messes, especially when you have moving averages start to roll over and markets that are a little testy. So I stop myself out, and I'll revisit if all of a sudden it starts, getting back above 27.18, I'll get back in a feeler, and then I'll add to it when it gets in motion if it ever gets above this area. But for now, it's in no man's land. So, who needs to be there? Gold, it's been very weak somewhat this whole year. I think a lot of people are a little bit upset about it. People want to know what my thoughts are for gold coming into next year. I think a lot of people, it's out of favor for a lot of people, so as a contrarian, it could do better because everyone thought it was going to go to Pluto this year. But as far as buy a dip type thing, really big support is here at 150. Right now it's just in the middle of it. You have a bit of a downtrend that you could use here, which it's not even near. So at this point, I'm not in it. I'm not trying to hedge your portfolio. If you have 100% invested and you want 10% of it to be gold, I would be in only 5%. In order for it to get to all-time highs and get to 2,000 or 2,200, it's going to have to get through this major resistance where you have 1, 2, 3 tops. So it starts getting above. I hate to say it, it'll find a home in my account higher. It's got to get above this area in order to get me interested to then get above this macro resistance to get move back to the high. So for me, it's just pretty lethargic. Yes, did it hold a bit higher here today? This was, remember, I tweeted when I tested this gap from the last time we liked it right in August. It reversed, resistance, rejected it, and now it held higher. So, incrementally, I guess, you could say if it starts getting above 162-ish, maybe it squeezes back to the breakdown of this area, this trend line, which is around 164. But these are just incremental day trades if you want to be involved. Or if you want to be in tier 1 macro versus this support of 158.39, okay, just be in tier 1. But then it really doesn't start getting better or get really juicy or get any kind of momentum until A, it breaks at least this, B, it's got to reclaim all these moving averages, which will be very noisy. Then you have another downtrend and another downtrend. So gold has a lot of resistance in here. So don't overtrade it, don't be enamored with it, and I would wait. Unless you're just holding it, then hold it versus this, it breaks this, then 150 is really the major support. You go to the monthly chart on gold, and overall the monthly looks fine. Monthly just looks like you have this overall big bull flag, so to speak, after a major move, not ready to go higher, held in the top half of this range even. So it's still above the 8 and the 21. The 8's curling a little bit to showing you it's a little weaker than it was during this monthly run, and this was very fast and furious. So it's just showing you that the speed is changing. It did hold the 21-day here, so maybe it sees that again. I think if you're not committed and it breaks and closes below the 21-day, which it hasn't done, or didn't do it here in 2011, and here it briefly did it in 2008. If we were to break and close below it, then maybe you get out of the way, and who knows? Then guys who are thinking that this thing's really going to fall apart, then you start getting really short here. But at this point, it's really anyone's guess, and why guess when we could wait for more action? As far as let's see, oil. Well, what a laggard oil it's been, thank goodness. At this point, it looks as if it's trying to break above this lower channel here. It's not. It's still, to me, to buy the USO, you do have I guess you have a little bit of a gap here that held. If you're in the USO or in oil futures, as long as it stays above 32.77, potentially it gets above this channel and continues, which wouldn't be great for the consumer, but for a trader, long it, maybe you have that little space to about 34-ish. You do have a gap here too, and then the 200-day. But overall, oil has been not the place to be this year at all. Very lethargic trade. Remember when it broke this area and everyone was all worried, oh my goodness, what happened here? When it had a trend line here, a gap down, and then never even thought about getting back above it. And that's why it shows you if gaps don't get filled and things show fierce potency to the downside, just let it alone, and it's a choppy trade and it's not worth your time. But it's trying to repair. We'll revisit that next year. What else, Red Dog? Google, let's see what that did. It's controlled pullback, but again, very, very choppy. It did break below this trend line I drew today, came a little bit above it, so use, if you're in there, use 698 as your new point of reference. It's going to have to clear this mini trend line in order to get going. That's probably about 715-ish. Last time I really got interested was when it was clean right around here, gave you a nice little move, and still climbing this trend line and still looks okay. This wound up being a good trade here. When last quarter happened, finally got on its game, had a nice gap up, held it, and then just gave you that move to a high here of 774. For those who are trying to see how I did, for my high beta stock of the year was Google. My price target was 750 to 800 and a quarter, went to 775. My retail stock of the year was Walmart. When it was in the 60s, it said a clear 62. It can get to, I think, 72 to 75. Walmart went as high as, what is this? 77. So you could have, pick and chosen when you wanted to sell it. The reason why I liked Walmart was, this long decade, channel that it's been in for so long. So I figured at some point it should there are enough buyers and sellers in there that it's going to finally have a move and finally absorb this big move from the 90s. So it wasn't because I'm a Walmart fan. It wasn't because I like shopping there. It was because you had a decade-long channel that I figured could resolve to the upside, and it did. And it had to resolve to the upside by getting above 62. You go back to the chart, and that was right here. So nice move, and then it wound up coming in, and we'll see what happens. And I think the year before was Home Depot, and you go to the 2-year chart. This one still acting very well, and the reason why also I like this too is because you had major resistance that it wound up clearing. And you had a cup and handle pattern, which I'm not going to get into, but anyway, from 40 to 65 shows you could be a stock picker. And although I do think that my sweet spot is intermediate trends, like we've seen 3 of them this year. The first quarter trend, then the June 4th to the October top 1440, and then recently November 16th till around now. That's when I like to make my money, but as an investor, not everyone could be in front of their computer all day long and pushing buttons. So you want to have a few stocks that you really like that you could probably buy and hold and not be too worried about. So over the weekend, I think Sunday, Monday, we'll release the 2013 thesis, predictions. We'll have some fun with it. I don't have anything so extreme, so don't be too excited waiting for it. I think you could just read it then. It should be pretty informative, and it'll go along with our mantra, so to speak. So with all that said, I am out Friday. I am out Monday. I hope that I'll be. I'm not in another country. I will be away on vacation. I'll try and check in. Definitely at Red Dog T3 Live. I'm not going to be on my computer the whole time. I'll be looking a little bit from afar. So you'll be able to follow me a little bit more on Twitter than on the virtual trading floor, because I can't just type right into my virtual trading floor from my iPhone. So make sure if you are on Twitter, follow me at Red Dog T3 Live, and just keep the risk down. Again, this is the time to enjoy your family, enjoy your friends. It's a time to reflect a little bit, not beat yourself up, but you look into your what's it called? It's been a long week already. Not your trading manual. Someone tell me, if you were Cameron, you could talk to me. Your book, your whatever it is that you write down, and your journal. Yes, there, journal. Hopefully you're writing in your journal and you're talking about what you've done well, what you didn't do well. Read through it, and it'll help you, point out things that you're not good at. Like today, even for me, I was trying to be short Apple, and I'm just not really that good at pressing shorts. Same way yesterday, everyone's like, Red Dog, why didn't you, short Amazon at 255, at 254? I'm like, you know what? I'm just happy to be out of the way, happy not to be longed. I'm an offensive coordinator on that. I do tend to make some money short, but it's not really, where I make the majority of my money. I would say maybe 20% of my money. I'm just happy to sometimes be out of the way and realize when it's not going up. So if ever I think something's going to go up and I'm like, this is not going up, it's heavy, I'm getting out, you want to get shorted, because typically that means it's going to go down. But anyway, I'm going to have to try and work on, getting a little bit better at holding shorts and giving things some space. So figure out what you're not good at and just work on it. And then also the most important thing is figure out what you're really good at and get better at that. Expand upon it. Hold maybe a little bit longer. Increase your size. Perhaps take a few different positions or more positions. Do something different, or try and work on something and write down, kind of like, you go into the new year and you write down a list of things you want to achieve. Personally, do the same thing with trading. It could be helpful, and then you can at least check over them every now and then and see if you're really putting a concerted effort into achieving that. So with all that said, I'm sorry, I feel like I'm talking and I'm very tired, but it's Thursday and it's been a long week. It's been a long year. We've had a lot of things that we've had to endure, from Hurricane Sandy, and then you had the election sell-off, and then Newtown, Connecticut, just very just hard. You can't even talk about it without welling up, especially if you have kids or if you're just human. And now we're dealing with this debt crisis, which I'm sure it's going to be dealt with some way. These politicians never let a crisis go to waste, and they're taking this one to the final hour, and unfortunately they're taking the U.S. through the mud in the world's eyes, and it's just unfortunate to see that this is the way our political system works and how dysfunctional it is. For me, this is me. I'm not a politician. I would say we need term limits. Can't be in friggin' Senate for a gazillion years, or I would say one-term president, 6 years. So this way, as soon as they get elected, they're not trying to get their second term. If I was coming up with some kind of compromise, I would say, you know what, we have to raise some taxes. Let's raise taxes on guys that are making $500,000 and above. Okay, the state taxes, the whole exemption thing. Right now, I think it's at 10 for a couple. Make it for 5. Okay, if you're leaving that much money and that's your exemption, I'm sure you're leaving a hell of a lot more than that. So, whatever. I know you're getting doubled and triple tax on it. It is what it is. I think as far as the dividend tax, I think, capital gains is going to go to 20%. Taxes on dividends, I would not raise. They're going from 15%. You go 30, 40%, you're screwing the retirement individuals, because they're the ones who usually, make the dividends, and that's what they're living off. If you've already taken away, savings interest, and now you're going to take away, a portion of their interest, that they make on dividends, and you're going to tax that. So maybe from 15 to 20%, but nothing more than 20%. I do think, and I hate to say it, unemployment insurance. These guys have been collecting unemployment since 2007, 2008. A lot of them are unmotivated to do anything because they're getting that check. I think you have to take it away. I hate to be heartless, but you gotta, take away the intravenous cord there and then let them go find a job. It might not be their dream job, but you know what? Not a lot of people have their dream job. So, maybe it'll motivate them to go to work. So, I'm not an expert. These are just some common sense things that I would throw out there if I happen to be walking through Washington on the streets and I saw some of these smart guys and tell them where I think their compromise should go. So let's see what happens. I'm just babbling, and hopefully you like to hear me babble. I don't think a lot of people do. And with that said, happy, healthy New Year. I wish everyone the best. The T3 Live community makes me proud, and I will see you guys soon.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.